But I'm going to talk about the business case for not setting monetary goals in day trading. For not setting a goal of making 100 a day, 200 a day, 500 a day, 10,000 a day. The case not setting those goals. So that might be seem a bit counterintuitive, because we should all set goals. Quit smoking, lose weight, get in shape, and a myriad of other New Year's resolutions that we make that we never keep. But they're goals, and they're good to have life goals. Nothing wrong with that. I mean, we need to set goals, and it's always a good idea. And a couple of famous guys have said, write your goals down, put them on the fridge, and read them every day. Because if you don't, you'll never achieve them. But I think in day trading, or even more in day trading, and not so much in the swings, but in the day trades, I think it's counterproductive to set monetary goals, such as I want to make $100 a day, I want to make $300 a day, I want to make $500 a day. That's my goal. And I think now the reason I think that is a mistake, but I'm going to talk about how the goal should be set. The reason I think that's a mistake is you may overtrade, you may take bad trades, you might do a lot of things because you've got it fixed in your mind that you need to put a certain number on the green side of the ledger every day. And if you're not, then you're missing a trade, you're doing something wrong, and you might take bad trades. Or on the alternative to that is you might make $300 and say, oh, I hit my goal, I'm selling my stock, and then the stock continues to run. So I'm suggesting that you don't set daily goals on a monetary basis. Now, this is not liberal left-wing thinking where we want to share our profits. We don't. You have to remember that in the market, there are no friends at all. You're pitted against everybody, Mr. Market being the main one. And he wants to take what you have. There's no doubt about it. Whether you're long or short, whatever way you're going, he's going to try and take as much money from you as he can. But what we do want to do is we want to think about, because we're entrepreneurs, we're business people, and we want to be capitalists. So what capitalists want to do is maximize their profit, minimize their risk, and maximize their profit. So one of the things that we teach here in the Turbo Trading Room all the time is to stay in the channel, stay in the trade. Let the trades run. We're not setting goals of making $100 or $300 or $500 in the trade. That's not our goal. Our goal in the Turbo Trading Room is to maximize profits. If you have a goal, you're going to limit yourself to maximizing your profits. So when a stock starts to run, let's find one. Roku, for instance. It's in this channel. It's trending up. The markets are hot. There is no reason to be out of this stock. If your goal was to make $300 on the stock or $500, depending on your size, of course, then you're probably out of this deal and you've missed this move. We're in this at 39.80. It's now 55. Traded to 55.27, and we're still in this trade. Now we've sold a little bit along the way because we also want to minimize our risk as best we can. So we piece it out as we go along. But in a trade, we're looking to maximize our profit. We're looking to let these stocks run, let them go. And so if you have a daily goal, that might interfere with your thinking. It might interfere with your thinking on how far these stocks can go. And so we have three types of trades: small win, small loss, big win. Now, for instance, on the CIEN today, I traded this, and I got in here at 42, and I did sell some up in here, a quarter of my position, 42 and a half or something like that, 42.54, and I was going to let the rest run. Now, but in doing so, I also was prepared to give back some of my profits. I didn't sell it all there. I did sell some of the top, as it turns out, but I didn't know it was the top. So just by virtue of the fact that I was selling stock on the way up, at the $0.50, I thought that would be an area to sell some. It started to run through it. I did sell some, and then it came off and pulled back. But the point being, I didn't have a monetary goal for this thing. I had a trading strategy, and that strategy was to let this run so that I could maximize my profit. And in this case, I didn't necessarily maximize my profit because it pulled back, and I sold some at less than at the top. But you don't know. I mean, you don't know where it's going to stop. You don't know where the top is going to be, and that's why I'm very good at top ticking these trades. Because the reason I'm very good at top ticking these trades is, and if you don't know what top ticking means, what that means is that you sell your position at the very top of the trade. That's top ticking. The reason I'm good at top ticking is not because I can pick it, it's because I'm just selling pieces of my position all the way up. And as I do, then eventually I end up selling right at the top. And as it rolled over, I gave some of it back. But if this had held and kept running, that was the risk I was prepared to take. My goal was to maximize my profit. And in this case, I didn't quite maximize it because I sold some of the top, and then as it rolled over, I had to sell some. So I didn't quite meet my goal in that one. But the strategy is the same. If it had kept running, then I would have been maximizing my profit versus selling it out for, in some rooms they like to trade it for 10 cents or 5 cents or 20 cents. That's not our style. Our style is to let stocks run, maximize our profits, and minimize our losses.